Let me bring on board Bhaskar Bukrediwala, who is the head PMS at IIFL Capital, joining us this morning to give us a sense as to how he's viewing Indian markets and opportunities. Bhaskar, firstly, very good morning. Let me start off by trying to get a sense as to, with regard to especially the AI debate, because that's the big debate we're having here in the studio this morning. How much of that is going to have an impact on Indian IT services? When we were listening into what NASSCOM was suggesting yesterday, around 3% of the revenues currently within the Indian IT space comes from AI or as a component of AI. Is that expected to go up materially? How are you viewing some of these trends? How much of an impact will it have on Indian IT?
Good morning. I think too early to quantify the impact in terms of the overall numbers over the next 2-3 years. Will AI have some impact on the earnings or on the overall fundamentals of the IT companies? Very difficult to say. At the overall level, yes, it will have some impact in terms of especially the productivity gain that it can bring onto the table. I think there will be two sort of impacts. The productivity gain that will come because of the AI, when a certain IT company uses certain tools, AI tool to become more productivity, that needs to be passed on to the client, and therefore that would mean that the overall value of the services that they offer will come down a bit. However, as I sort of understand and analyze things, what I also sort of pick up is that there will also be an offsetting impact. Companies which will be able to evolve, companies which will be able to enhance their offerings in terms of what they can offer through AI and integrate the whole AI platform into the existing legacy platforms, make the outcomes more productive. I think the value of services will go up. Very difficult to quantify in the near term what kind of offsetting impact and the productivity gain both put together will mean in terms of numbers. But I think companies which will evolve, and I don't think that some of these IT companies are, I think they are very, very evolved. One may sort of undermine that, look, they don't currently have that kind of AI ability, but I think their ability to sort of evolve, hire the right people, right talent, integrate all the offerings into a more outcome-based, I think will play out eventually. I do not really see a very significant impact in the medium to long term. In the near term, very difficult to quantify. There can be certain order-based impacts that can happen. But yeah, overall, I would not see a very significant impact, especially from a medium to long term, and especially those companies which have the ability to sort of evolve over a period of time.
Great. Bhaskar, since you are joining on the sidelines of the IIFL Capital Entrepreneurial India Conference, tell me, what's the chatter on India? Where is it that one is getting a sense of profit pools getting created? And we were there yesterday. It seemed like financials as well as the Capex seems to be the clear favorite.
Yeah. No, I think the mood is improving for sure versus what it was, I would say, around 6 to 8 months back. Clearly, there was a point in time, and especially around 12-16 months back, September 2024, when we made all-time high, when clearly the valuations looked punchy in India. The growth had started to slow down post the general elections then because of the lower public capex. But I think things are turning around clearly with a lot of impetus that has been given by the government, both on the fiscal and by RBI on the monetary side. It seems that the growth in India, especially the domestic growth, is clearly picking up. That's visible in a lot of sort of data that we track, be it commercial vehicle sales, credit growth numbers. You look at the cement volume growth numbers of late. So clearly the growth is picking up. Valuations, I would say, while it may not be extremely attractive, but I think it has become far more reasonable than what it was, let's say, around 6 months, 12 months back. Nifty today is trading at around 20 times earnings, and I think with a lower base of earning for 2 years and now earning expected to improve, I think the setup is far better. The risk reward, I would say, is better, and especially we are still in an environment where the interest rates are benign. So given all that, I think the mood has improved. Yes, in the last 3-4 days, because of the AI related news flows and disruptions, there are certain stocks and sectors that have taken a beating. But I think the overall sentiments have clearly picked up. The risk reward setup looks far favorable as we move into the next financial year as I speak.
Bhaskar, hi, morning. Sajit here. Your IIFL Blue Chip Alpha portfolio is up nearly 3.5% for last 6 months. So, which are the sectors that you're bullish on? Because in the last 1 month, it has been a bad month for many of them. But over a 6-month period, it's 3.5% up. So, what is the sector portfolio allocation for you now?
Yeah, so that portfolio has done well. It's a portfolio where the strategy is to identify deep value and then we look at triggers. So I predominantly invest in large caps or larger mid caps. Some of the sectors that we like are consumer discretionary, be it consumer durable, travel, tourism, hotels, etc. Again, because of what government has done on the fiscal side and also on the monetary side, the actions taken by RBI, I think there will be far more money that will be left in the hands of the consumers, and all that we believe will flow into the hands of consumers and consumer discretionary. Apart from that, I think clearly the banking cycle or the lending cycle seems to be picking up. As I mentioned, credit growth is far better than what it was in the first half of the year. While most of the repricing of the loans has happened in terms of the transmission of rates that needed to happen on the RBI cuts, I think the repricing of deposits is currently happening. So next year can be very strong from an earning point of view for banking companies, both in terms of the growth and the margin expansion. The asset quality should be fairly stable. So banking is another sector. Insurance, because of the GST cut, I think that the momentum of growth that we have seen in the last 3-4 months should continue. And capital markets, I think if you look at the SIP data flow, SIP has continued to be very resilient at around 31,000 crore per month, and that adds almost 9 to 10% of growth to asset management, wealth management companies without even taking into the market effect. Given that market looks fairly benign and ready to sort of move up, if I combine both the SIP flow effect and the market effect, then I think that can augur very well for the earnings of some of the companies. So these are largely 3-4 plays that we are playing in that. I think another sector that I would say is auto and global auto anchors. I think again the global auto cycle seems to have bottomed out and is picking up, and there are good interesting companies which can be beneficiaries of that. So these are some of the sectors and companies that we are playing.
Interesting. Bhaskar, I know you've covered auto anch within that consumer space, but what else within consumer? Do you expect core consumer to start to perform, because that has been a large underperformer? Also, what should an investor holding, say, banks and financials, and holding it for a while now, it's been a large or a long sideways move. How should one justify it and say that maybe over the next 1 year, will returns really level off and the underperformance of the last maybe year or two get nullified over the next year within financials and consumer? How should one look at it?
Yeah. So you mentioned that some of the banks have been more sideways, but if you sort of dissect the overall lending space between large private banks, PSU banks, smaller private banks and NBFCs, you would see a lot of pockets have already moved. So PSU banks have done fairly well, including SBI, which has posted phenomenal growth numbers, and that's sort of clearly getting reflected in the value creation in the stock. Some of the private sector, the smaller private sector banks have moved up, and even some of the NBFCs have done well, be it the likes of AB Capital or even Chola. So it's not that that pocket has been very sideways. It has moved up quite considerably. I see some pickup now to happen in large private sector banks, because as I mentioned that the NIM cycle, the margin expansion cycle, as well as the growth will pick up, especially as we move into Q4 and next year. I think that's a pocket where there is deep value. and with growth picking up and margin expansion happening, I think clearly that's one pocket that can move up, which has not meaningfully participated, as you rightly said. Of course, there are other pockets that have participated well. In terms of your question on other consumer sectors, I think if we again dissect it into between discretionary and non-discretionary, discretionary, which is largely the non-discretionary, which is largely the FMCG pack, I think that's a fairly well penetrated category, and plus that whole space is seeing a lot of competition from new age companies which are getting into specific personal care segments or specific categories, and there is a competition that's increased. I don't see a significant up move in that space over the next 1-2 years, and the valuation, I would say, is still not very, very attractive. Consumer discretionary space is something, of course, that as I said, looks very interesting. So aviation is one play where I think there is good value, and as things further pick up, can be beneficiary. Hotel, travel and tourism, parts of auto sector. So yeah, these are places where I see value. QSR, there's some of the QSR companies that have started to do well. Retail, certain value retail companies, I see good opportunities there. So yeah, so these are segments that I think within the consumer discretionary can do well over the next 12 to 18 months.
Bhaskar, which are the sectors which you are underweight, or you are not you are avoiding at this point in time?
While I mentioned about my views on IT, that it may not have a very disruptive impact from a medium to long term, because it's very difficult to sort of quantify the near term to medium term earning impact. That's a place that we are slightly we are underweight clearly compared to the benchmark. The other space that we are underweight is the FMCG or the consumer non-discretionary pack, the entire FMCG pack. So yeah, so these are two packs. These are two spaces that we are clearly underweight on our portfolios.
Okay, interesting. Bhaskar, you have a great rest of the day at the conference. Good to be speaking with you.
Thank you so much.
Okay, let's